What is happening, everyone, and welcome back to Tenken. The news cycle is moving at warp speed, and if you're not paying attention, you might just miss the next big thing. We've got a packed show today, bringing you the absolute latest updates that you need to know. From global market shifts to exciting consumer tech news, we're diving deep into the stories that are shaping our world right now. Get ready for some unmissable insights and breaking developments that you won't find anywhere else. Let's jump right into it. First up, we're heading to India, where the electronics landscape is seeing some serious shakeups. South Korean giants are solidifying their dominance, but one major player seems to be facing some headwinds. We've got the inside scoop on who's winning and who's feeling the pressure in one of the world's hottest markets. Then we're shifting gears to the financial world, focusing on a tech powerhouse that's been making waves. Is it the right time to invest? We're breaking down the latest analysis, looking at performance, future prospects, and whether this stock is a buy, a hold, or a sell. Get ready for some sharp financial insights. Next, we're back to the consumer electronics arena, this time zooming in on the Indonesian market. Demand might be softening, but two major brands are actually seeing their shipments surge. We'll explore what's driving this growth against the market trend and what it means for the competition. And finally, get ready for some incredible deals. A massive sale event is on the horizon, promising huge discounts on popular device lines. We've got the details on the specific models, the price drops, and how you can snag some amazing tech for less. Don't miss out on these savings. Stick around because you won't want to miss any of this. Hit that like button, subscribe, and ring the notification bell so you never miss an update. Korean brands cement their grip on India's TV market. South Korean giants Samsung Electronics and LG Electronics are reinforcing their leading positions in India's television market, a sector experiencing rapid growth in consumer electronics. This continued dominance highlights the strong appeal and market penetration of these established brands in one of the world's most dynamic consumer landscapes. Samsung Display, a key player in display technology, continues to be a significant force, supplying vital components that power the vibrant screens consumers expect. Their technological prowess and extensive manufacturing capabilities allow them to consistently deliver high-quality products that resonate with the Indian audience. LG Electronics, another powerhouse, is equally committed to innovation and market leadership, leveraging its diverse product portfolio and strong brand recognition to maintain its competitive edge. Together, these South Korean companies are not just selling televisions. They are setting the standard for home entertainment in India, adapting to evolving consumer preferences and technological advancements. Meanwhile, Xiaomi, a brand that has rapidly gained popularity for its aggressive pricing and feature-rich devices, appears to be facing increased competition and challenges in maintaining its previous market share. While Xiaomi has made significant strides in establishing a strong presence, particularly in the smartphone segment, its performance in the television market is under scrutiny. The company's strategy of offering competitive pricing has historically been a major draw for Indian consumers. But as the market matures and other players enhance their offerings, Xiaomi is finding it harder to hold onto its ground. The intense competition from established players like Samsung and LG, who benefit from long-standing brand loyalty and advanced technological integration, presents a formidable challenge. Analysts suggest that Xiaomi may need to innovate further or adjust its market strategy to counter the entrenched positions of its South Korean rivals. The broader Indian electronics market is characterized by its vast consumer base and a growing appetite for advanced technology. However, it is also a market where price sensitivity remains a crucial factor. While South Korean brands are excelling by offering a blend of innovation, quality, and brand prestige, Xiaomi's challenge lies in balancing its cost-effective approach with the escalating expectations of consumers and the aggressive strategies of its competitors. The ability of these companies to adapt to changing economic conditions, consumer demands, and technological disruptions will be key to their success in this fiercely contested market. The ongoing battle for dominance in India's TV market is a clear indicator of the dynamic and rapidly evolving nature of the global consumer electronics industry. Public reaction often centers on the value proposition, with consumers weighing features, price, and brand reputation. Analysts are closely watching how Xiaomi adapts its strategy to regain momentum against the strong performance of Samsung and LG. But what does this mean for the future of tech investment? We're diving into whether it's time to buy, sell, or hold onto a major tech player next. When should you buy Xiaomi Corporation, HKG 1810? Xiaomi Corporation, HKG 1810, has recently experienced significant price volatility on the SEHK, reaching a high of HK$60.15 before dipping to HK$50.80. This fluctuation presents a critical question for investors. Is the current trading price of HK$55.85 a reflection of Xiaomi's true value, or does it represent an opportunity to acquire shares at a discount? To answer this, we must examine Xiaomi's financial data and outlook for potential catalysts that could influence its stock price. Our analysis, employing a price-to-earnings (PE) ratio model against industry averages, suggests that Xiaomi's stock may currently be trading at a premium. With a PE ratio of 35.76x, it significantly exceeds the tech industry average of 18.58x. This valuation indicates that investors are paying more for each dollar of Xiaomi's earnings compared to its peers, potentially signaling that the stock is overvalued relative to the sector. However, the high beta associated with Xiaomi's share price suggests substantial volatility. This volatility could offer future opportunities for investors, as the stock price might decline, presenting a more attractive entry point aligned with industry PE ratios, or it could continue to climb. Looking ahead, the future outlook for Xiaomi appears promising, particularly concerning growth. Projections indicate an impressive profit growth of 87% over the next couple of years. This expected surge in profitability is a strong positive indicator for the company, suggesting that higher cash flows are on the horizon, which could, in turn, support a higher stock valuation. This growth trajectory is particularly appealing to growth-focused investors who prioritize potential capital appreciation. For existing shareholders, the current market sentiment seems to have already factored in Xiaomi's positive future outlook, as evidenced by its trading above industry price multiples. This raises the question of whether it is an opportune moment to consider selling. If one believes the stock is overvalued, a strategy of selling at the current high price and repurchasing it later at a lower valuation, closer to the industry average, could be profitable. However, any such decision should be preceded by a thorough review of Xiaomi's fundamental financial health. For potential new investors, the current market conditions might not be ideal for entry. The stock's premium valuation compared to its peers suggests that much of the potential upside from mispricing may have already been realized. Nevertheless, the company's strong growth prospects remain a compelling factor. Investors interested in Xiaomi might want to monitor the stock for potential price corrections, which could offer a more favorable entry point to capitalize on its anticipated growth. It's also crucial for investors to be aware of any underlying risks. Our analysis has identified at least one warning sign for Xiaomi that warrants attention. Furthermore, a comprehensive investment strategy should consider a diversified portfolio, and potential investors can explore other high-growth potential stocks using specialized screening tools. Market sentiment indicates that Xiaomi's positive outlook is largely priced in, leading to a premium valuation. Investors are weighing whether to capitalize on current highs or wait for a more favorable entry point. While the financial markets buzz with stock analysis, the consumer tech world is also alive with activity. We're now heading to Indonesia to see how major brands are performing in a shifting market. Xiaomi, Samsung shine in falling Indonesian market. In the second quarter, Indonesia's smartphone market experienced a downturn, with shipments declining by 7% year-on-year. This contraction was primarily driven by weaker consumer demand and prevailing economic uncertainties, which particularly impacted the mid- and premium-tier segments. Counterpoint research data reveals that while the overall market contracted, market leaders Xiaomi and Samsung managed to buck this trend. reporting significant double-digit increases in their shipments. The Indonesian economy, despite efforts like government incentives to stimulate consumption, has seen these measures primarily directed towards essential goods, failing to provide a substantial boost to the smartphone market. This economic climate has led to a noticeable slowdown in purchasing power for non-essential items like high-end smartphones. However, the entry-level sector, encompassing devices priced below $150, showed resilience with a modest 3% increase in shipments, indicating a continued demand for affordable mobile technology. Within this challenging environment, Xiaomi emerged as the top player, securing a 21% market share and posting a robust 10% increase in shipments. This performance allowed Xiaomi to maintain its leading position in the Indonesian market. Following closely behind, Samsung captured a 20% share, a notable increase from its previous 16% share, and achieved an impressive 20% growth in shipments. This strong showing by Samsung underscores its ability to resonate with Indonesian consumers, even amidst broader market headwinds. Other major players experienced a decline in their market standing. Oppo's share dropped from 18% to 16%, accompanied by a 14% decrease in shipments. Similarly, Vivo saw its market share fall by 5 percentage points to 13%, with a significant 29% decline in shipments. Infinix managed to hold its ground with a 10% share, even registering a 5% growth in shipments, indicating some level of success in its market strategy. A significant trend observed in the market is the growing adoption of 5G technology. Shipments of 5G models accounted for 35% of the total smartphone shipments in Q2, a slight increase from 32% in the same period last year. This suggests a growing consumer interest in faster mobile connectivity, even as overall market conditions remain challenging. The contrasting performances of major brands highlight varying strategies and market resilience. Xiaomi and Samsung's ability to achieve growth amidst a market contraction points to strong brand loyalty, effective marketing, and potentially well-aligned product portfolios that cater to the evolving demands of Indonesian consumers, particularly in the entry-level segment. Market observers note that Xiaomi and Samsung's growth defies the overall market trend, attributing it to strong consumer trust and effective product strategies in key segments. With these market dynamics in play, consumers are always on the lookout for great value. Get ready for some exciting news about upcoming deals on popular tech devices. Xiaomi announces early Diwali sale. Top deals on Redmi Note 14 series, Redmi 14C, Redmi 15. Xiaomi is gearing up to launch its highly anticipated Diwali with Xiaomi Sale in India, offering significant discounts on a range of its popular Redmi smartphones and accessories. The sale event, timed to coincide with India's major festive season, promises substantial price reductions on devices like the recently released Redmi 15 5G, the Redmi Note 14 Pro 5G, the Redmi Note 14 Pro Plus 5G, and the budget-friendly Redmi 14C. Additionally, popular accessories such as the Redmi Buds 5C will also see discounted pricing, making it a comprehensive offering for consumers looking to upgrade their tech. The centerpiece of the sale is the Redmi 15 5G, which will be available at an attractive starting price of Rupee 14,999, down from its original launch price of Rupee 16,999. This substantial discount makes the device, known for its big screen, solid battery life, and overall value proposition, even more appealing to a wider audience. Xiaomi has also launched a dedicated microsite to build anticipation for the sale, although the exact start and end dates are yet to be officially announced. This strategic pre-launch campaign aims to capture consumer interest and drive engagement ahead of the main event. Further enhancing the appeal of the sale, the Redmi Note 14 Pro 5G and Redmi Note 14 Pro Plus 5G are set to receive significant price cuts. The Note 14 Pro 5G will be offered at Rupee 20,999, a considerable reduction from its current price of 24,999. Similarly, the Note 14 Pro plus 5G will be available for 24,999, down from Rupee 30,999. These price adjustments are particularly noteworthy, as they position these higher-end models at much more accessible price points, making them highly competitive during the peak festive buying season. For budget-conscious consumers, the Redmi C will also be part of the sale, priced at Rupee 8,999, which represents a 1,000 discount from its regular price of Rupee 9,999. This ensures that even entry-level buyers can find attractive deals. Complementing the smartphone offers, the Redmi Buds 5C wireless earphones will also be available at a reduced price of Rupee 1,799, down from Rupee 1,999, providing an affordable option for those looking to enhance their audio experience. Availability is set to be broad, ensuring that consumers across India can take advantage of these promotions. The Redmi 15 5G will be sold through Amazon and Xiaomi's official website. The Redmi Note 14 Pro 5G, Note 14 Pro Plus 5G, Redmi 14C, and Redmi Buds 5C will be available across multiple popular platforms, including Flipkart, Amazon, and Xiaomi's own e-store. This multi-channel approach maximizes accessibility and convenience for shoppers during the busy Diwali period. The Diwali with Xiaomi sale is positioned as a major event for the brand, aiming to capitalize on the festive shopping fervor and drive significant sales volume across its product range. Consumers are expressing excitement for the upcoming Diwali sale, with many anticipating the significant discounts on popular Redmi devices. And that brings us to the end of another packed update. We've covered market dominance, stock evaluations, and incredible deals. Korean brands are leading India's TV market, while Xiaomi faces challenges. Xiaomi's stock valuation is debated, with potential for future growth but current premium pricing. In Indonesia, Xiaomi and Samsung are gaining market share despite a general market slowdown. Xiaomi is launching a Diwali sale with significant discounts on popular Redmi devices. That's all the news that's fit to print today. Don't forget to smash that like button if you found this update helpful. Subscribe to Tenkenh for more of the latest news and analysis delivered straight to you. Ring that notification bell so you never miss a beat, and let us know your thoughts on these stories in the comments below. Follow us on all social media platforms to stay connected. We'll see you in the next one.